be then a real fire chat. So we have with us Philip Shen and Arturo. Philip, Managing Director at Roth Capital. Probably you all know him and his team research, which is one of the greatest in the industry. And then we have again Arturo with us, who's also almost a fossil in the industry, working now for GameChange before. I think probably one of the few executives in the really inner circles of real big Chinese companies, both at Jinko and at Trina in the past. So let's quickly start. So let me see. This should be really a fire chat. Arturo, I start with Phil first, and then I get you in a little bit later because I think Phil has to leave. So what I want to start first a little bit with the big picture. So really brief answers, 1 or 2 sentences, and then I continue. So when we look at the global development of solar power plants today, Phil, after Q1 is closed, are we on schedule as a sector compared to what we expected at the start of the year? Or if not, why?
My sense, first of all, Michael, thank you for hosting me, and nice to connect with everybody. To your question here, my sense is that we might be a little bit behind schedule, and you know, I think everybody's feeling this pressure out there with rising input costs causing module pricing to go higher, and then just delays with freight. You know, the increase of freight upwards of 500 to 800%. And just cost through the whole system and friction through the whole system. So that's my current sense there, Michael. I'll keep it short and turn it back to you.
Okay. And so when we look at the latest numbers from Bloomberg New Energy Finance, so I think end of February they came out with their Q1 market update. So they forecast that the market would be between 160 gigawatt on the low side and 209 gigawatt on would be the upper range. That's quite wide, but nevertheless, and I think for 2022 they forecasted 162 versus 221. What do you think? And so, by being a bit delayed and also with some shortages, what's your best estimate from today's view, and why is that so?
Yeah, I think we'll probably be closer to the low end of that range. You know, we don't, you know, we have to ultimately lean on some of these other industry forecasters, and we kind of do a meta forecasting approach, if that makes sense, Michael. And so the way I see it is we're probably at the low end, and for a couple of reasons. Number one, for all the things that we cited earlier, resulting in delays and push-outs of projects and so forth, not only in the U.S., but also in China and elsewhere. But then also number two, I think the size of the Chinese market is going to be smaller than expected. So this is kind of a corollary to the first point. You know, there is a substantial degree of elasticity in the Chinese market, with many projects in the back half of the year being grid parity based. And so module pricing has gone up so much, you know, call it from roughly 20 cents per watt in China to call it 24, 25 cents per watt now. The incremental marginal projects need to be delayed so that the investors can get their IRRs later when the module prices come back down. Now, of course, a lot of people say that SOEs are not as sensitive to return hurdles, and I agree, but ultimately there likely is some demand push out or installation push out. So it's a kind of a greater elaboration of of my answer to your first question there, Michael. But I think China's market will be smaller. In terms of the U.S., we've heard of one developer recently talking about pushing projects into 22 and 23, and this was a gigawatt scale developer. We've talked to a few others, and they are still holding firm with their schedules this year. So I think it might be less in the U.S., but that's. Yeah, those are some thoughts there.
Yeah, maybe this where Arturo could come in, because you have to also do some product planning. Arturo, what are you seeing? Are you also seeing actually that developers are delaying projects into 2022 because of what Philip mentioned?
Well, there are several inputs here that I would like to mention, and I completely agree with Philip in the context we are living right now. So hi again, Philip, nice talking to you in this panel. So basically, the situation of COVID-19 obviously is not helping for the financing, and even though we are quite grateful to be in this industry compared to other sectors that are really suffering with this situation of lockdowns in globally, except in China, they were only locked down for 3 months. But taking not only the situation of COVID impact that has been putting on hold some of the investments and for sure has been delaying some projects. Also, we have seen that impact on the cost increase for especially for tracker manufacturers for the steel raw material. But also this morning we were talking with one of our important clients that they have been impacted also by other materials, by raw materials in general, by copper increase on the cost for cabling. So, and not only that, also we have been seeing this impact on the transportation costs. So when projects are supposedly to have an IRR quite planned with this project finance realized in the last months without taking on account these considerations on costs increase, obviously then they realize that probably makes sense in some cases to put on hold the project and wait for better times, probably, hopefully, in the next coming months, beginning of next year, when the situation is a little bit more certain in terms of cost. Okay, cool. Then yes, Philip, once to you. I think you have to leave in 5 minutes. So when we look at the top 3 developments to get some more upside in the market, and if you look at the top 3 challenges for the sector of this year, so could you just briefly kind of tell us what you think they are?
Sure. I think they're all both related. They're all related. So it's the direction of, poly pricing, the direction of steel pricing, freight. That if those prices continue to stay high, then module prices have to continue to creep up, which destroys marginal demand. And then inversely, if those things come down nicely, then we can start to see some relief. Glass pricing has started to come down meaningfully. I think we're pretty close to the July levels of last year after almost doubling or more than doubling. And so that's a good start, but we need poly pricing to roll over. At this point, my forecast is it's probably going to be tough for poly prices to come down. Steel prices, I hear that people have a very difficult they still don't know when steel prices will come down. And then in terms of freight, I think that relieves over time, but I don't think it's a step function lower. So hopefully that's brief enough for you.
And then maybe actually, I think so, talking about some overarching challenges that are not directly impacting us now, but might, like Xinjiang.
Oh, right. So there's an article out today that is potentially very powerful around the solar industry in Xinjiang, published by Bloomberg. They had investigative reporters go to Xinjiang specifically to research, I think, solar. And I was just looking at it during the conference, and I haven't read the whole thing yet, but it seems like this issue will continue to gain traction, unfortunately, for the industry. But from a human rights standpoint, I think it's important for us to understand exactly what's there. So I think it's growing here in the U.S., and then I'm starting to hear that it's starting to grow in Europe as well. So we'll see how this issue resolves or evolves, I think is probably a better word, in the coming year or two. And the unfortunate situation is that you need to we could get what's called WROs, which are temporary restraining orders or withhold release orders from the U.S. Customs and Border Protection Agency against specific companies. So that's the thing I've been watching for the past few months, and my sense is it's still very much alive.
Okay, before we let you go, maybe one quick question. So you also recently started covering tracking companies among financial solar companies you're covering. So what's most surprising you learned about that BOS part of solar when you look more deeply into that?
So we recently launched coverage of array technologies, and in that process we interviewed upwards of 15 different customers for the 5 different constituents, developers, EPCs, O&M providers, financial backers, and asset owners. And almost across the board, I was surprised by how much of a concentration and kind of mind share that the top 2 players have. Nextracker and ATI really have a lot of the mind share. And conversely, or related to that, not conversely, but rather related to that, the reason why is because the customer base is so risk averse. They look at and so I guess what I would say to those in the audience today is, especially the tracker companies, is do your best to, I mean, you guys know this as well, but the risk averse nature, whether it's due to logistics or just reliability, track record, balance sheet, bankability, on down the line, the customer base wants to mitigate all those factors, and so that was probably one of the most surprising things.
Okay, thanks. Then I let you go, Phil. Thanks for that brief contribution, and then good luck with your own event.
Thank you. Okay, bye now. Thanks, Michael. Bye, Arturo.
Okay, thanks. Okay, Arturo, then let's maybe pick up there. I think you have now the big slack. We have quite some questions. Let's stay brief. So maybe also, do you agree on the top 3 developments in the sector and the big challenges? Are you also seeing that material supply is the big problems, or what do you see? So really just brief topic-wise. So what do you think are the biggest challenges?
So well, challenges are there. I think again there is kind of perception from the investor community that we are in a good industry, and I'm very optimistic. I think in the last more than 20 years I'm in this industry, we have seen a huge improvement in credibility and in support from investment perspective, and also from the government. So I think solar and renewable energy sector is booming, and is true that there is more and more fundings to these projects and to solar specific project finance from the banking community also. So I think there is a big trend, a good, especially now in USA, and GameChange Solar is from US. So we have also this good news of this change on the government to Biden, that's I think is much more supportive to solar than before, than previous conditions we had. And globally, and including in Europe, Spain is now very much one of the top 5 countries in Europe, with big expectations for more than 4 to 5 gigawatt yearly for the next 5 to 10 years. And we are going to see this trend also coming again from Italian market, from French, from Germany. And at the same time, Asia is not stopping. So we are seeing India with big trends to get their targets for 2050. And Prime Minister is committed to that. We have seen China also supporting a lot the schemes of golden program, but also for large scale programs. We have seen also in Vietnam, that was surprisingly with more than 1.5 gigawatts yearly. And we are seeing also Australia, that's before in the last 20 years didn't have so much expectations on large utility scale projects. So we are very active also in all these Asian countries. So from my perspective on a global basis, I think we are optimistic and we will see much more demand, and a lot of competitors or even solar module manufacturers are sold out. So this is a good signal that the market the demand is stronger than the supply for now.
That's great. Okay, that's true. And so, so maybe coming back, you've been in solar also for ages, but you've been mostly working with module companies, so with BP, with Trina, with Jinko, and now you joined tracker companies. So if you look at tracker technology, so how important would you rate tracker technology on a scale from 1 to 10? To help solar becoming, we're the cheapest already, the world's largest power generation source. So what's the role of tracking technology? So I would like to understand.
I think it's very good points, very good question, Michael. I wasn't expecting something easier. So what the role of the tracker as a technology to combine with the inverter as a brain of the project and combined to the new generation of modules that are also, I would say, they are in two trends, right? In the increasing the current, reducing the voltage, and having higher power modules. It's challenging, but I think it's key. It's key in two aspects, as I was explaining in my presentation of GameChange Solar at the beginning of this webinar. The goal and the objective of the whole industry is, one, to maximize the yield, right, and to increase the power of the production and the return on the investment of the project. And second is to reduce the cost, reduce the LCOE, not only for the CapEx of the components, but also for the OpEx. So in this regard, the tracker has been crucial because we are, one, maximizing the yields by having this combination of the design of the tracker plus the software with the algorithms of tracking the sun, and also these stow positions based on artificial intelligence that are learning how to improve in order to not to put the tracker in the stow position immediately, but to understand which is the wind, let's say, wind tendency. If it is just suddenly doesn't need the tracker to be in the stow, but it is something permanently, obviously we need to guarantee the stability of the tracker, as we have seen in the presentations today. So we have the action of the tracker to be in a stow position. So one is to increase the yields, right, and to optimize the production of energy along the hours of the sun. And this is crucial also with the combination of the inverter. And I think that is something that the industry will work together, putting together the trackers and the inverter combined in order to get the inputs from current and voltage from the inverter to fine tuning the trackers in each individual row, each individual string. And secondly, it is also very important to reduce the costs, the LCOE, right? So in terms of CapEx, we believe that we need to do the maximum process in technology and in production to reduce the cost of the tracker itself. So we are implementing economies of scale. In GameChange, we have over 24 gigawatts of capacity of production, but also we are not only improving in terms of speed in production, but also in terms of the materials that we are using and the quality controls at the same time. Secondly, we need to make sure that we reduce the EPC cost. So we have been putting together several actions to reduce the time of assembly. That is crucial when the labor costs, like in the USA, are very high, or in Australia. If we increase the speed of the installation of the trackers by simplifying with pre-assembly parts our factories, or for example, reducing the quantity of screws and nuts, and having this kind of speed clamps that is patented in order to fix the panels into the structure. Or for example, another important thing, as we were mentioning before, reduce the civil works, right? So we are implementing this TopoSmart, that is a software in-house design on 3D that is aligning the tracker according to the orography and the topography of the fields with a different side length of the piles, without the need of, let's say, without the needs of so much cost on civil works, right, on the ground. So we are overcoming the up and downs of the hills and valleys with a very stable.
Let's do, we have 5-6 more minutes, so let's maybe, sure. on a scale from 1 to 10, so how important are trackers in the energy transition?
I would say definitely 6 to 7 is very important.
Okay, super. So when you look at solar trackers today, the share is already quite impressive. So I think if we look at ITR PV, at least they assume that it was in utility scale solar around 30% in 2019. Already 32% in 2020, and they believe it will grow to 40% in 2030. Do you agree with that, or do you think it can be even reach a higher share in the next 10 years?
The answer, Michael, depends on the country and depends on the price on the solar panels. So if in countries like USA or Australia, or where it makes sense to maximize the radiation of the sun, because the rest of the companies are already expensive, and the cost of the materials are expensive, and the cost of the civil works and the assembly cost of the EPC are expensive, probably it makes a lot of sense, and it will be much more market share coming to trackers versus the fixed tilt, right? In countries like in Asia, I mean China, India, where the price of the modules also are lower, the cost of labor are less expensive, and probably even the field, the land, square meters are cheaper, then probably makes sense more the fixed tilt, right? We used to have the analogy that if the panels were for free, it is better to put them flat on the floor without any tracker or even any fixed structure. If you don't have any limitations of land, it's better to have the panels flat on the ground. But obviously, when you want to maximize the power in a limited area, and you have the shortage of the perimeters of the layout of the project, then as much you can maximize this production, the better, right? Because the panels are getting more expensive now. This year especially are more expensive because of the cost of the raw materials.
Okay, maybe 3 more questions. So I think Phil mentioned that also. I think one thing is bankability and of course risk awareness of investors and developers. So we've had one presenter today with Trina, which is now turning into one of the world's largest module manufacturers, also integrating into that field. On the one hand, actually, you have some. Phil mentioned some market leaders like Nextracker, and then you have of course some companies that are getting into the business very strong, like you do. So how do you see the market dynamic? Will we see more consolidation already? In our tracker survey, we have 19 companies, several small Chinese we don't even have covered because they are serving the Chinese market only. And so what are you seeing? I think, will it rather grow because the market will grow, or will it rather consolidate? Because if we look back at solar, everyone is always saying, oh, all these module manufacturers, they will vanish, but we still have module manufacturing being started. So
that the answer from my point of view is, as you mentioned, is bankability and references and track record, right? So there are a lot of newcomers, especially for fixed structures, and we also produce fixed structures. There are many manufacturers that they are not even in solar, so they can have a quite easy barriers of entry into the renewable energy sector. With tracker, it's a little bit more difficult, because in trackers we have much more the interaction, as we mentioned before, with the software, the know-how on this tracking, all these features of backtracking, what we call boost tracking. This kind of features is making much big difference for just a producer or manufacturer of structures, I would say. So the know-how is very important. But what is crucial is the bankability and the reference list. We are number 3, top 3 right now in the USA, after Nextracker, as you mentioned, as its leader globally. But also internationally, we are growing very fast. Even if we came into this industry 6 years ago only for the trackers. I mean, in these 6 years, we have been having this exponential expansion. And this basically because we are creating a brand recognition, especially in the USA. And I recognize that outside the USA, the brand is taking a little bit more time to be accepted. But with the reference, with big names behind, not only on the banks or investors, but also developers and EPC companies, it's true that they are really feeling comfortable, because in tracker, and differently from the module, you need to provide service. It's similar to the inverters. You need to provide technical service, not only before the contract is signed and before the installation, but also in the installation. You need to provide service in the commissioning, and previous that you need to train the installer to understand your tracker and to do it fast, right? So there's a lot of service that EPC companies are learning, and they realize that with our tracker is faster and easier and less complex than with other competitors, that they need the special tools, or they need a crane to fix the motor, or they need much more complexities. But also, not only you need to train the EPC companies, but also the developers. The investors, they need to realize that this growth in power is real. It's not just in the project finance paper, but they realizing that with a reference like NextEra in the USA, they started with GameChange long time ago, many years, and they continue being one of our biggest clients, because we provide this kind of reliability, and they trust the tracker and the performance. And the same in Europe, right? We started with Acciona, with Canadian Solar, with big projects, and they are continuing ordering with GameChange, because they have this trust, and they have seen that the numbers and the performance and the quality is correct, and the trackers are not flying over because of these problems of design that we have seen in the industry for the last years. So trust and convincing is very crucial.
So that means
I believe that will be consolidation, yes.
Okay, so I think so the bigger ones will take more actually, and I think rather the fixed space is a little bit for newcomers, otherwise it will be difficult. Okay, understand. Right. Then quickly, 2 more. One, actually, why do you think solar trackers are sort of sexy from the investment side of things at the moment? So, okay, it started with Nextracker 6 years ago when Flex took them over for, I can't recall, 300 million, but a lot of money actually. And then actually there was a long time nothing. Last year, 2 companies went public, actually, also tracker companies. One has recently just filed in the US. So what is it that investors find interesting now in tracker manufacturers? Well,
as you know, and I'm sure Philip was, he was here in our call still, he will be explaining much better than I do. But investors are looking for companies that are profitable, and they have good potential of growth in revenues and in market share globally, right? So they don't look anymore at regional, localized companies. They are looking for international in terms of geography, but also that they don't have big debts, and that they have a management team that is reliable, right? So you can see, I mean, ATI was not public until they started to go outside of the USA in several markets like Australia, and they did some good jobs also in Argentina and South America and Spain. Nextracker with Flextronic started very strongly internationally also, so was key. GameChange, we are international also for the last 1 year that we started outside of USA, and Artec, for example, they did a very good IPO also because they were not only Chinese, they were also outside in international markets. But at the same time, they are companies that has been in the stock market recently listed because they managed to convince investors of this trend of growth, and they had to do that, otherwise they were not going to be surviving today. So it was very important for them to get cash, and they also are strong now, and they are trying to convince that they can probably to reinvent the industry roadmap for the next coming years with the new trends in this industry, like the new modules power, the new technologies that we have been talking of for the last 5 hours. So I think now is a good time, and investors realize that we are not only reducing costs, but maximizing also the output, maximizing the IRR thanks to the trackers. And this is something that for investors is quite appealing, is attractive, right? I think modules, they have been listed, and I, you know, in my past story, we were very successful in IPOs, but the margins were very tiny, and the margins, they don't have so much, I would say, so much potential, right? But in trackers, there is still a nice gross margin, and also I believe that it is part of this trend in the industry to have these companies of trackers being listed in IPOs.
Okay, yeah, okay, great. And maybe final question, you know, the solar market is growing fast, and usually it's growing much, much faster than people believe, even the most positive analysts, at least if you look back in hindsight, they've been all way off, basically everyone. And so how do you think, if we look just 10 years ahead, how do you think the utility solar sector will look, and what role will trackers play, and how much will it be different from today?
Well, I don't have a crystal ball, Michael, but following the trends in the last 20 years, if it can help to see how is the tendency in the next future, there are two interesting changes, right, in the industry. One is the OPEX become much more important than before. So the percentage of OPEX versus CAPEX now is really crucial. And before probably was not so important. So there will be much more important. Companies will give much more importance to reduce the maintenance and reduce the operations cost. And at the same time, we are seeing that the module prices, even though this has been increasing this year, but has been to a level of low prices that we have not seen that in the last 20 years. So what I do believe is that we are reaching a grid parity that we have been looking for that for many years. And in some countries, we are already at grid parity without the need of any subsidies or any feed-in tariff. As you remember, in Europe, that was the trend. Now we are competing with the standard or conventional sources of energy. And we are being really successful in this sense. So I do believe that we will continue in the renewable energy scope, solar PV photovoltaics to be the leader, and we will continue to implement more and more larger scale projects, especially in countries like South America and like Africa, that they have a lot of extensions and sun radiation. And the second trend that we cannot forget is the hydrogen, right? The green hydrogen. That will be another topic for the next probably webinar. But the green hydrogen will also be probably coming very strong in the next 3 years. There are a lot of companies already investigating a lot and implementing the production of hydrolyzers. And this will be a challenge also for inverter producers, because then at that time, probably the solar utility plants will produce completely in DC, and they will not need this kind of inverters. And probably the transportation will be using the pipes of the gas, and they will completely differently change on technology, and the cost structure will be minimized again.
Okay, Arturo, thanks so much. I think that was super. I learned a lot on tracker technology, I have to admit, and I hope everyone else did as well. I was very happy with the content, with everything. So thanks, first of all, to my team, actually, getting this event together. Thanks to all the speakers who helped us with this. Min, can you just get in the presentation once again? Thanks to, obviously, the sponsors of this event and our report. And just very briefly, the report will be for download Monday in a week, so that we can get also some of the input we learned here in the report. And second, also because one of the companies is having a product launch towards the end of the week, and we are covering that as well. So finally, I would like to say the industry is growing, so do we. If you're looking for a job as a solar market analyst, we're happy to have you join our team. Then I would like to refer to our upcoming event. We do now monthly events, and some months even two events. We go a little bit more up the value chain. So we're at the moment doing a market survey on solar cell production equipment. In May, we will have an event on that topic. At the same time, at the moment, we're working also on high power modules. Those guys who have been causing quite some headache to the tracker community and to many others as well. So that means this report will be also distributed at SNEC in China, which will physically taking place beginning of June. So these are our two next projects. Thanks again for joining us, and yeah, stay tuned. Maybe one thing, so the report comes out on Monday. If you're spontaneously interested in advertising in the report, you still have a chance. We would need the ad by Friday this week in order to get you in. Thanks again for joining us, and have a nice day or a nice evening. Bye-bye.